Hello everyone, this is Tanvir Chinoy with Global Bookkeeping Tax Solutions. Thank you for joining me for another short video where we give you knowledge and information to improve your business. Today I will talk about few common bookkeeping mistakes that you could make which could trigger an IRS audit. There are 5 major items I want to talk about. The first one is mixing personal and business money. Let's say you have a business bank account and you're using that bank account for personal reasons. What could go wrong? If that happens, in case of an IRS audit, they will look at your bank account, and if they see any personal items, they could go back and deny some of the other deductions that might actually be for business. Please do not use your business account for personal reasons. Second thing, wrong expense categories, classification. Make sure that you're accounting for all your expenses and revenue in the right category area. If there's one expense that is incorrect, and if it goes over approximately beyond 50% of your total sales, that could trigger an audit. For example, auto expenses. Let's just say you have $60,000 auto expenses versus $100,000 total sales. Most likely that will be flagged as an IRS audit. Just make sure you are categorizing your expenses and income in the right area. Third one would be not reconciling your books with your bank. Why is that? This is extremely important to identify any fraud items that may have gone out from your bank account that you may not be aware of, right? I've seen that in the past. Make sure you're reconciling to make sure you're looking at each and every transactions to see if there are any items that should not be there. Fourth, payroll and 1099 entries. In this case, it's very important that you make entries, for example, for any contract labor in the contract labor categories or third party versus employees. And you're also identifying the payroll taxes and actually separately accounting for in your accounting system, just to keep the labor in the right area as well as the W-2 wages. Number 5, missing receipts and records. Most of the time when you use a bank account, when you use your card, your bank account shows, for example, if you spend money at McDonald's, that's pretty self-explanatory. You don't need to keep receipts for that. But for big items, the standard rule is over $2,000. If you're purchasing an expensive item, you should keep receipts in case you have to go back and send it to the IRS. Remember, clean books, fewer IRS problems. We can definitely help you as well. Please contact us at 832-467-3018. We provide bookkeeping, payroll services in a very cost-effective manner, as well as tax planning. Thank you so much for joining me for this short video. Please stay tuned for other videos in the future as well, where we give you information to help you in your business. Until next time, have a wonderful day.